brainchild of Apollo CEO Mark Rowan. In January, Apollo closed its $11 billion all-stock merger with Athene Holding. It had already owned 35% of the insurer. Here's what Apollo gets out of the deal. Assets under management. Apollo expects them to double to about $1 trillion by 2026. Much of that projected growth will come from the merger, and those assets are especially attractive to Apollo. Insurance companies typically go after much more modest returns than buyout investors. That will give Apollo more options for investing the cash. Athene is a steady provider of fee income. It has grown into one of the nation's biggest holders of fixed annuities, those retirement savings products favored by risk-averse customers. The merger will also allow Apollo to simplify its governance. It gave up its dual-class share structure and adopted a one-share, one-vote plan. The hope is that will eventually lead to Apollo's inclusion in the S&P 500.
Get your fixed income fix. Watch Bloomberg Real Yield every Friday at 1 p.m. Eastern, right here on Bloomberg, your global business authority.
Slice through the noise.
Forget the noise, ignore the noise.
Is this just going to be noise?
Just noise.
It's noise versus signal.
Now, more to the point.
What is the lesson or the observation?
But it definitely feels like a bottom.
You look at from a positioning perspective, flows perspective, valuation perspective, economy perspective, narrative perspective, economy perspective, everything is at the bottom.
There's still a lot of pessimism.
There are stocks in China which you don't really want to hold at any price.
The index is still too concentrated on, sectors which have traditionally been the growth for China. I don't think they're going to see the same sort of ports.
Just some of our guests really talking about whether China's market has reached a bottom. Well, the economy, has that also reached a bottom? We've got a release of official PMI data for Saturday. On Saturday, I should say, it's all for September. China economy editors Jill Deasis. Jill, we won't know we've had the economy stabilize until it has stabilized, and we're a couple of months ahead of that. So what's it going to tell us, and just as well as I on the Saturday?
Yeah, so I mean, look, I think at this point what we're looking for, though, are those signs of stabilization, right? Those signs that we've already reached the bottom, that maybe we're past the worst of the slowdown so far. So on Saturday, we're getting these official PMI data for manufacturing, non-manufacturing sectors. On the manufacturing side, the broad economist consensus is actually that that gauge is going to tick back up into expansion territory for the first time since March, so indicating that we're past the worst of the summer slump. A bit of this is cyclical as we're getting into, later into the year, the holiday season. Maybe those manufacturers are recovering, but that's also maybe an indication that some of the stimulus that China has been rolling out since the Politburo met in July, if you recall, is maybe finally starting to take effect, whether it's on the monetary policy side, some of those policy rate cuts kind of stuff. Maybe it's a bit of those fiscal incentives. Maybe that's actually transmitting through to these manufacturers. I will say, though, that we are looking out, though, on the non-manufacturing side, so that gauge that includes construction and services activity. Is there going to be a bit of an easing there? There have been some concerns about consumer demand and how that's weighing, a bit on the construction side. How much is property really playing a role? That, I think, is what we're going to have to see, whether there's an easing in that particular index.
Talking of transmissions, satellite imagery. Now, this is something that a lot of people have been very, very much enamored by as a true indicator of what's going on in terms of economic activity, and the satellite data show that we could be seeing a recovery.
Yes, Rish. Well, ultimately, we're still pretty early on in this, this process of gauging the recovery again, right, as you said. So what we want to do is look at these high-frequency indicators that maybe give us a sense over the past few weeks, has the momentum been sustained? And so we talked to this U.S. company, Space Node. What they do is they examine in satellite intelligence data, or satellite data, kind of trying to get activity on the ground. What they saw was that at shopping malls in China, actually, there's been a pickup in activity around shopping malls in the month of September, maybe indicating that consumer confidence, consumer demand is still picking up there. They also were taking a look at construction site cement output and actually seeing some sustained recovery there, not as much as it was, maybe before the property crisis back a couple of years ago. But ultimately, yes, some positive signs there. We'll have to see if that transmits into official data as we get it over the next month.
Yep. Thanks, Jill. Jill teases there. Why use balloons when you've got satellites? Anyway, that's another story altogether. Let's have a look now at China Evergrande, of course, the epicenter of what's really been happening, at the time being at least, in the property sector there. The billionaire founder under police surveillance, suspected of crimes. China credit editor Kevin Kingsbury is with us now. Kevin, it just gets worse.
It's just been some week, Rish. I mean, last night they confirmed the Bloomberg report from Wednesday, where Bloomberg had reported that he was under police surveillance. Evergrande said last night that he is, quote, subject to mandatory measures in accordance with the law due to suspicion of illegal crimes. Now, there's still much that we don't know, including what is the government looking at. Obviously, earlier this week, Kaijin, the mainland media outlet, reported that 2 former executives of Evergrande were detained by police. Some staff from Evergrande's wealth unit several weeks ago were detained as well. So it may all be related. Maybe it's not, but with so much of Evergrande, it seems to be a bit of a black box at the moment.
It is. Kevin, people are saying this, and with what's happening with Country Garden, that it's only a matter of time before they will face the Grim Reaper, as it were. Now, tell me something. People say it's not going to be a Lehman moment for China, but when you look at the amount of foreign money which has also been invested in these companies, not just by the bondholders, but the shareholders as well, surely it's going to ripple across the world.
Sure, you would think that. I mean, we've heard some of these folks where China tech is uninvestable over the past year or two, as China was cracking down on that sector. We might see some of this other outflows of foreign capital from China just because of the unwillingness of government to kind of really step in and kind of help the property sector, because they think of property, which at some point was a quarter of China's economy. If the government is willing to kind of let that go, or kind of let the companies themselves kind of fend for themselves and kind of figure this all out, if there's no big support behind it, then where else might this happen similarly?
Yep, that's a good question. An open-ended one too.
Yes, definitely.
Kevin,
to be continued.
It will be. Thank you, Kevin Kingsbury, our China credit editor. We've got a lot more on the way. Just taking a look at equities as we are bouncing higher today, led by the Hang Seng.
Small businesses are determined and always planning their next move. It's easy with GoDaddy's
What do you like most about your job?
I think the people. I mean, ultimately, we're a people business. A lot of what my job is as CEO of the company is to give those people sort of motivation, to tell them where we're going, to encourage them to come up and do their best work, to encourage them to collaborate. Sometimes you sort of think you're almost a psychologist, as you are a business leader, I think, sometimes.
And so what's your best piece of advice?
I love pitches. I love being sort of leading from the front, if you like, and spending time with teams. I love to see the work that we're doing. When we pitch for a piece of new business, often when we come together. So I guess I try and put myself in the seat of the client. What's the client going to think when they see this work? Are they going to be excited? Is it going to turn their brand around? How's it going to resonate with their consumers? So as much as possible, I try and play that role.
Let's look at how Nike closed out the session with some pretty good gains. In fact, 7.8% up, and seeing some of the Nike suppliers in this part of the world also doing well. Better than expected earnings and a drop in its inventory stockpile, really responsible. Sportswear giant had a $2.9 billion first quarter revenue number, just shy of the analyst estimates. Gross margin, now there's a key gauge of profitability. That was ahead of expectations as well. Inventories down 10% from a year ago. That's being seen as a sign of progress and moving out some of the old stuff and bringing in more newer and more profitable items. Another corporate story we're looking at, HSBC, the head of public affairs, is to step down shortly after controversial comments about the British government's handling of its relationship with Beijing. Sources telling Bloomberg that Sharad Kapur-Coles will leave the lender next month. In August, the former diplomat apologized for calling the UK weak for allowing the US to guide its business dealings with China. And US federal prosecutors have charged a former Goldman Sachs and Blackstone employee with securities fraud for allegedly giving friends tips on deals. He's 26 years old. He's Anthony Vigiano. He told two friends about transactions he knew about from his time at the Wall Street firm. These Wall Street firms, I should say. It's alleged that the group made more than $400,000 on those trades. Let's just check in with the oil market ahead and just taking a look at what we've been seeing. Brent crude off by about 0.2%. It's really, as we saw, a decline from this time yesterday of about 2.2%. Responsible here, really, oil just marching towards that $100 a barrel mark. Traders appear to be locking in profits given some of that turbulence in the bond markets. Also, we've got futures, though. In fact, we've got this biggest quarterly gain for general oil prices since March of 2022.
Our studios in New York and San Francisco. Our expert hosts have the data and analysis about the companies you know and the startups to watch. Plus, the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West. Only on Bloomberg Television, your global business authority.
From New York City,
From London, in Sydney,
from Washington,
in Tokyo.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening. Here's what I'm watching.
You do not want to miss this story.
Is there the kind of upside?
Wall Street is waking up. Europe is already trading. And Manus Granny and Danny Berger are making sure you have the news, data, and analysis you need to set your agenda. Micro, macro, and everything in between. Manus in New York and Danny in London follow the money.